Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. Industry dynamics are putting dry bulk market shipping stocks like Golden Oceans Group, traded on Nasdaq under symbol GOGL, back in the spotlight. Shipping stocks have been on the move over rising conflict in the Middle East, with Houthis strike on cargo ships in the Red Sea and retaliatory strikes from the US and the UK. There are fears that Israel-Hamas war could ignite and spread across the Middle East and disrupt trade in one of the world's busiest marine shipping routes. John?
Even if the situation is resolved in the near term, it could take months before shipping traffic returns to normal in the Suez Canal. As a result, shipping companies are now taking longer routes to avoid the Suez Canal, which is boosting the price for longer trips. Now, instead of going through the Suez Canal and entering the Mediterranean Sea, container ships are taking longer routes around Africa.
This will, of course, mean shipping rates will remain elevated for quite some time. Analysts estimate that the shipping rates between Asia and the US eastern seaboard have jumped 40% over the last month alone. Okay, John, but what about the Panama Canal that connects the west coast of the US with Atlantic routes to Europe?
Well, there's actually issues there too. Drought has restricted the number of ships allowed to pass through the canal, just 24 per day, and that's well below the daily capacity of about 38. Now, this is resulting in a months-long bottleneck. Now, keep in mind, all of this is happening at a time when demand for dry bulk shipping is already expected to increase significantly in 2024.
A shortage of dry bulk ships and marine freight rates up anywhere from 20 to 50% should be a win-win scenario for Golden Oceans Group.
Golden Oceans Group is the world's largest publicly listed dry bulk company. Currently owns and operates a fleet of 95 dry bulk carrier vessels, focusing on the largest segment, which is Capesize and Panamax markets. Capesize vessels, the largest of bulk ships, are used to transport coal and iron ore. Now, because of their size, which is twice as big as an NFL football field, they can't pass through the Panama Canal. Instead, they need to travel around the Cape of Good Hope, hence the name Capesize. Panamax vessels, meanwhile, are the largest class of ship that can navigate the Panama Canal.
And solid third quarter, which includes a reliable cash flow results in a reliable high-yield dividend.
Yeah, reliable cash flow and growing fleet means Golden Ocean can provide investors with a reliable high-yield dividend. When times are good, of course, and they are right now. The company reported a third quarter dividend of 10 cents per share, or 50 cents per share on an annual basis, for a current yield of 5.08%. Now, if you look at the company's chart on incomeinvestors.com, you can see that the company's quarterly dividend payout fluctuates based on time charter equivalent rates and earnings. And it can fluctuate pretty wildly too. For example, in the fourth quarter of 2019, it paid out 5 cents per share. It suspended it during the 2020 health crisis, reinstated it in the first quarter of 2021 at 50 cents per share, and hit 90 cents per share in the fourth quarter of 2021.
How is Golden Ocean stock doing?
It's definitely on the rebound, with industry dynamics helping juice Golden Ocean stock, which, as of this recording, is up around 11% over the last month alone, 36% over the last 6 months, and approximately 19% year over year. Now, going forward, analysts have provided a one-year average share price forecast of 11 cents per share. Now, this forecast has not been updated since October 2023, so there's a chance analysts have become more bullish on Golden Ocean stock, at least over the near term.
John, thank you so much for your insights. The world's leading owner of large-sized dry bulk vessels, Golden Ocean Group Limited, continues to be a great marine shipping stock. It delivered solid third quarter results. Its time charter equivalent rates are significantly higher than its break-even levels, which provides it with reliable cash flow. That cash flow is expected to increase as demand continues to outstrip supply, which should lead to ton-mile demand growth. Growing tension in the Red Sea should also provide compelling case for Golden Ocean Group, and that should help juice its ultra-high yield dividend and share price. And make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.